Hello and welcome. You tune into Market Fatafat with me, Ankita Saxena, and with me is, as always, is Sneha Seth. And this is the show where we take you through all the stocks that are buzzing away in trade, either on the back of news flow or on the back of technical charts. But first up, let's see how markets are faring, Snehi. It's a day of recovery or short covering, if you will. But
Yes.
as of now, we are perched above 23,100 comfortably.
Yes.
But it's a very important week which could give direction to the markets. We have the Fed decision, we have the monthly expiry tomorrow, and of course the big union budget on Saturday. So this is a week where we could get some direction into the market.
Absolutely. Lots of triggers like you mentioned. Hi there, good afternoon. Let's take a look at what the market is panning out to be like at midday right now. 23,151 is where we are at on the Nifty. It's an 0.8% uptick. At the day's highest point is where the Nifty is. A good 195, almost 200-point recovery from the day's lowest point, so looking good. Sensex also 0.8% uptick coming in right now around the 76,500 mark. So Sensex also looking rather healthy. Nifty Bank seeing modest gains of 0.4%, so not much to worry about. It's the broader markets that are doing all the bidding for the markets today. Overall, you have Nifty Mid Cap that is logging in some solid 2% gain coming in. Nifty Small Cap once again is the outperformer, and 2.6% gain coming in on Nifty Small Cap as well. While all looks good, we also have to keep in mind the India Wix, because that is up another almost 3.5% right now, and we are at 18.8. We are dangerously close to those 19 levels, so that is looking a little bit shaky right now, and that is going to be a point of contention. But if you take a look at the advance decline ratio, very steeply in the favor of the advances today, so that is looking good. Sectorally, let's take stock of what the market is up to right now. Media as your outperformer, followed by IT. Now remember, IT stocks took a beating on the back of that DeepSeek news, and they seem to be recovering well right now. Realty, auto, metal, energy, pharma, PSU banks and Nifty Bank, all of these stocks are, all of these sectors are in the green. What's not doing well is the entire FMCG pack. It's the only sector in the red right now. Slightly more than a 0.5% cut coming in over there. It's Godrej Consumers, Britannia, ITC and Tata Consumer. Tata Consumer numbers are tomorrow. It's a Nifty 50 FMCG major, so that's also going to be closely watched for. But before its numbers tomorrow, that stock is trading rather flat at a 0.3% cut. But well, yes, FMCG is the only sector in the red right now. Very quickly highlighting what other stocks are buzzing in today's trading session. Bajaj Auto, good set of numbers. BEL before its earnings tomorrow. Tata Motors, Shriram Finance, Wipro, SBI Life. These are the ones that are giving life to the market today on the Nifty 50 front. So all in all, looking good. And we are comfortably above the 23,100 mark for now.
All right, then let's get started with all the stocks that are in focus today. And for that, let me invite Sneha Seth, who's a senior analyst, technical and derivatives, Angel One, on board on the technicals. And from our research team, we are joined by Jinay. Hi, good afternoon to both of you. Thank you so much for joining us. Let's get started with all the stocks that are in focus today. First up is an earnings candidate, Motilal Oswal, that is in focus today. Well, this stock surged almost 3% in trade today after posting a rather mixed set of results. It has given up those morning gains, but nonetheless trading with gains of 2.4% as of now. Mixed results is what Motilal Oswal posted. They reported a 14% year-on-year decline in consolidated net profit for the December quarter, which amounted to 565 crore rupees compared to 660 crores in the same period last year. But the company's total revenue from operations increased by 12%, reaching 1,999 crores in quarter 3 as compared to 1,791 crores in quarter 3 of FY24. However, on a sequential basis, the profit after tax dropped 50% from 1,120 crore rupees in the previous quarter. Even the revenues witnessed a 30% decline as compared to 2,838 crores in quarter 2 of FY25. The company has also announced an interim dividend of rupees 5 per share for the financial year FY25. But on the back of this mixed set that Motilal has posted, Motilal is nonetheless gaining almost 2.4% in trade right now.
Okay, well, market seems to be cheering even the ones that have not done very well, and that's rare to see. So looking good, at least for Motilal right now. Sneha, hi, good afternoon. You've picked out RVNL for us on the charts. Now, all of these railway counters they've seen their good days, but last 6 months, this stock is lower by roughly 30% or so. Tell us if this is a tide of reversal that you're spotting on the charts. Is there recovery, if that is something you're seeing?
Very good afternoon, first of all. Now, if you look at the chart structure, yes, we have seen decent correction. And in last couple of weeks, we have seen on the higher side, 437, 435 zone has been acting as a resistance. Looking at recent development wherein we are seeing continuous, this is the second consecutive session that we are seeing some recovery. And I believe any move beyond 435, 437 would be very interesting for this counter. The risk reward ratio seems very good. There are chances of reversal if this counter surpasses 437 level on the closing basis. So at present, if someone wants to go ahead and long, expecting an up move, I would suggest that you can go ahead and long with a strict stop loss of around 410, and the first target would be around 437. Once we move beyond that, then possibility of this counter heading towards 470, 480 zone is very much likely.
Okay, so 470, 480 on the immediate upside is what Sneha is spotting for RVNL. Let's talk about Bajaj Auto. That's an earnings candidate from yesterday post-market hours. Nifty 50 Auto Major numbers are looking largely in line with the street expectations. If you take a look at the earnings fine print on the standalone basis, revenue has come in at 12,807 crores, which is an uptick of roughly 6%, or 5.7% to be exact on a year-on-year basis. Net profit has come in at 2,108 crores. That's also looking higher by 3.3%. EBITDA has also gone up by 6.2%, and EBITDA margins have very nominally gone up. So that's not much happening on that front. However, the management has given the growth outlook, wherein they've provided a positive volume outlook for the next 3 to 6 months. They expect exports to continue to grow at 20% plus levels, and the domestic motorcycles growth rate should normalize to a near-term outlook of 6 to 8% in the industry. So that's the outlook coming in from the management of Bajaj Auto. But here's what brokerages are making of it. Axis Capital continues to maintain a sell. Target price has been reduced from 8,000 earlier to 7,550. Nuvama on the other side is slightly positive. They maintain a buy rating with a target price of 10,700. So that's the earning fine print and the brokerage outlook for Bajaj Auto.
All right, before we move on with other stocks, Maruti's earnings have come out. PAT has come in at 3,530 crores versus ET-Now4 of 3,624. A very marginal downtick is what we are seeing as far as PAT is concerned. Yes, PAT, of course, has been below ET-Now estimates. We'll see some more numbers trickling in. If you could flash and pull up Maruti's chart as well. We also have, we still have PAT running in. Let me quickly check what the results look like for Maruti. We also have, as far as Maruti is concerned, for now, all the auto stocks are doing pretty well in trade today. Of course, because of Bajaj Auto, that came out with solid commentary from the management, and on the back of that, all the auto names were doing pretty well for themselves. And on the back of that, Maruti is also right now is marginally we can see that downtick coming in right after. See that slipped below 1% right now. As far as the results are concerned, PAT is a slight miss.
Revenue number coming in, Ankita, that's coming at 38,492 crores, just slightly under what we were expecting. So revenue is largely in line with what the ET-Now poll is. Net profit is a marginal miss because that has come in at 3,525 crores versus 3,130 crores this time last year. And what we were expecting for PAT is 3,624 crores. So slight miss coming in on that front. But overall looking slightly mixed for Maruti Suzuki, because revenue in line, you have a PAT marginal miss coming in. EBITDA has come in at 4,470 crores. We were expecting 4,526. Very small miss on that front as well. And lastly, we have EBITDA margins. Numbers are also out. We have the EBITDA margin that's come in at, we'll bring you the EBITDA margin shortly, but well, yes, that's what the number is looking like right now. Revenue in line, PAT a slight miss coming in, and my first take on EBITDA is going to be a very slight miss coming in on that front as well. But Jinai, coming to you now, you've picked out BHEL, earnings candidate, and good set of numbers coming in. Tell us what the earning fine print looks like.
Well, as BHEL is in focus, if you look at the earnings, it was very strong numbers. If you look at revenues, that were up about 32% year-on-year basis, coming in at 7,277 crores. Also, the net profit that almost more than doubled, 2.2 times, coming in at 134.7 crores versus 60.3 crores year-on-year basis. Operationally, also the performance was very well. If you look at the EBITDA, that was up about 40.5% year-on-year basis, coming in at 304 crores, and the margins that also improved by 25 basis points, coming in at 4.2% this quarter versus 3.9 crore year-on-year basis. Now, if you look at the outstanding order book of the company, that is being reported at 1.6 lakh crores, with a major contribution coming in from the power segment, about 76% coming in from that segment. And if you talk about order inflow on year-on-year basis, there was a jump of 33%, which included about 48,000 crores of worth orders coming in Q3 itself. So that is why BHEL is in focus, currently trading up about 5%.
All right, moving on then. As we inch closer to the year's union budget, let's take a look at what the industry experts are expecting on corporate taxation. Rohinton Sidhwa, who's the direct tax partner at Deloitte India, anticipates the government will recognize the corporate tax structure to boost activity in the sector. Meanwhile, Yatin Sharma from Adidas India Marketing is urging the government to address the persistent slowdown in retail. Let's go across and listen in to their insights.
Tax collections continue to grow at a significant rate of 16% net of refunds, which puts the government in a very positive framework in terms of what they can possibly do as part of the budget. Now, if you're looking at a combination of personal and corporate income tax collections, personal collections are actually growing at a rate almost twice that of corporate tax collections, which means it's now the right time for the government to have some leeway to further look at some reorganization to spur corporate tax activities. Essentially, what we're really looking for is some sort of easier processes for corporate tax compliance, as well as to some extent some rate rationalization that can happen for corporate tax. One big problem with corporate taxpayers has been, unlike the individual taxpayers, most of them don't receive refunds at the same speed that individual taxpayers received. And consequently, if the government can look at process to kind of ease the refunds which are pending with a lot of corporate taxpayers and release them to them. The second area has been the VSV scheme. Just on an overall basis, the government has almost one entire year's tax collections locked up in litigation. Anything that they can do to reduce the litigation and continue to reduce the pace at which litigation gets added up would be a very positive thing for the industry.
From retail perspective, the main concerns and most important worry is an ongoing slowdown in retail sector from past many quarters, and our only expectation from the upcoming budget is to see some incentives and avenues from government which increases the turnouts of consumer in the market. This could be anything from the expectation point of view, like reduction of personal income tax, which eventually increases the purchasing power in hands of consumer and they actually turn out into the markets, reducing rate of interest on loans, GST rates reduction, or schemes for availing deduction on market spends like we did at COVID times. On the other hand, since we are also coming from a footwear industry is also largely affected due to the recent BIS norms. And the process of getting BIS certification is very slow. So needs some push from the government side on the expediting process and also some incentives and avenues to lift up the footwear industry at large. Other than this, the other expectation from the upcoming budget would be GST rate standardization. It's already in talks, simplification of Income Tax Act like removal of dormant sections. Amnesty schemes for clearing old litigations are always welcome as it releases stress from the industry at large. So these will be our main expectation from the retail standpoint.
Hello and welcome. You're tuned in to Market Fatafat, where we are taking you through all the stocks that are in focus today on the back of news flow and on the back of technical charts. Let's resume with all the stocks. Then Excite Industries is an earnings candidate that is in focus today. In fact, we saw a very marginal uptick in the profit in Excite Industries, but it's posting a good show of even after those results. It's up 2% almost. If you see the net profit, saw an uptick of 2% on a year-on-year basis at 244 crore rupees versus 240 crores. In the previous year. The revenue saw an uptick of a very marginal uptick of 0.2% on a year-on-year basis at 3,849 crore rupees. The EBITDA was up 2% on a year-on-year basis at 448 crore rupees, and the margins stood at 11.7% versus 11.5%, a marginal uptick of 20 basis points on a year-on-year basis. But Excite Industry reported a double-digit growth in both the two-wheeler and the four-wheeler replacement segments, driven by robust demand in the automotive, aftermarket. Similarly, the solar segment also saw double-digit revenue growth, supported by government incentives and the solarization programs. And on the back of that, even the exports did pretty well for Excite Industries. On the back of that, despite a very decent set of numbers coming in, the stock is up in a way 2% in trade.
Okay, so that's a lowdown on Excite Industries. Let's move on. In fact, that's an auto angle. Let's keep it going with the auto sector. Chennai TVS Motors, what you've picked out, yet another earnings candidate. Tell us what the numbers were like.
Well, as if you look at the earnings fine print, the revenues were up about 10% year-on-year basis, and the net profit that was up about 4.2% year-on-year basis. We have a note by Motilal Oswal, who have maintained neutral rating with a target price of 2,570. What they believe is that operationally the numbers were in line, and the margin expansion that continues on the back of a better product mix and forex realizations. While there is a recovery in the export market, what they believe is that a full recovery is yet to be realized, and there is more scope for export markets growth. Also, the management now that is they are expecting that the growth momentum will continue in FY26 as well. What they believe is that 2025 will be a good year for both domestic as well as international market, and they are aiming to grow ahead of industry in both ICE and EV segment respectively.
Alright, moving on from TVS Motor, but keeping with the auto pack, then Sneha, you picked up Maruti Suzuki, which is an earnings candidate. We just got the earnings for Maruti Suzuki, and we saw a sharp dip right after the results came out, but we saw a recovery and then a dip again. So currently it is trading at the day's lows point, absolutely flat right now. But tell us what you see on the charts for this counter. It has given good results. In the last 1 month, it has moved 12% after a consolidation in the last 6 months. Tell us from here on, where do you see Maruti Suzuki headed?
If we look at the chart structure, we have seen a very strong move coming up in the first week of January, which was supported with decent volumes even. So at present, the counter was, it was consolidating, wherein on the higher side, 12,200, 12,150 was acting as a resistance, which was breached today. But again, today is a result day. So at present, looking at the overall chart structure, I believe the chart structure is good. Anyone who's holding a long position with a strict stop loss of 11,800, it's a hold. If anyone wants to go ahead and take a fresh long even, so in case of any dips, one can go long over here. In case it closes above the 12,200 mark, the overall momentum would be quite high, and the stock may head at least towards 12,700, 800 soon.
Those are the next levels to watch out for on Maruti Suzuki. But with that, we'll wrap it up on the stocks front on this edition of Market Fatafat. Jinay and Sneha, thank you so much for joining us. But well, yes, it's a goodbye from Ankita and me. Thanks so much for watching. You stay tuned to ET Now.
If you like this video, then like, share and subscribe to ET Now.